As sad as this is to report, the dollar is about to swallow Argentina's chainsaw, making it the first major casualty of this increasingly harsh Eurodollar environment. When dollar conditions tighten like this, it leaves everyone in the system very little room, zeroing in on the weakest links. And with Argentina showing some of the same familiar signs, of course the Eurodollar sharks are going to start circling around it. Now, there was a lot of promise, and there still is a lot that can be gained from trying to be radical. However, for Argentina, the comparisons to 2018 are already too much. Back then, the Eurodollar tightening also ruined Argentina's previously less sweeping reforms, sending the peso plummeting and telling the world what it was going to get in 2019, which it did. And those were rate cuts and recession fears that turned into more than a few outright recessions. Now, here in 2025, Argentina's peso is also plummeting again, prompting Chainsaw Milie to state the market is in a panic. In the short run, everyone is speculating on who might step up and try one more rescue. However, history shows it won't much matter. It was the IMF in 2018 who came up with the biggest bailout in the organization's history, more than $50 billion, and the Eurodollar wave washed right over it anyway and crushed everything on the other side. In fact, the IMF's biggest rescue ever didn't even buy Argentina 3 months. That's because it all came to a head in 2019, right when the world was grappling with a very similar downturn and a, quote, recession scare. When the Eurodollar system turns this way, it leaves everyone with very little margin for error, and zeroing in on the weakest links like Argentina means very little chance of sustained success. That's because the biggest chainsaw in the world is yielded by the Eurodollar. And when it tightens up this way, it starts wielding that chainsaw in all the most destructive ways. In case you're not familiar with the story of Argentina, Javier Milie was elected in late 2023 as a libertarian candidate and part of La Libertad Avanza coalition. The country was once again being gripped by massive inflation, something that's been all too familiar with throughout its history. Being governed by one left-wing government after another, Milie was the change candidate who promised a radical break from the status quo that was not working, that had never actually worked. And he got enough votes in October 2023 to advance to the runoff and then secured the presidency with a landslide victory in it, showing just how much dissatisfaction there had been among Argentinian voters. In other words, people in Argentina were no different from electorates around the world, throwing current administrations and politicians out of office one after another, left and right, after hearing from them nothing but either glowing assessments of economic circumstances or promises that they would fix them by supposedly doing the same things that they had been doing before then. As I always say, economic instability breeds political instability. One of the least appreciated factors worldwide, because all we ever hear is the economy is terrific, so that can't possibly be a factor for voters. It has never stopped being, it's the economy, stupid. Before we go on with our video today, let me ask you a question. What if your gold could actually pay you every single month in more gold? That's what today's video sponsor, Monetary Metals, lets you do. And here's how it works. You still own the gold, it's still in your name, it's fully insured, but instead of just sitting there doing nothing, it actually starts working for you. Monetary Metals has built a system that turns idle gold into productive gold, earning real yield paid in physical gold, not dollars. No selling, no trading, no converting. You keep your gold, and every month you get more of it. It's a simple idea, but it solves a big problem. If gold is money, it should act like money, and now it finally can. If you're a long-term gold holder looking for a smarter way to store value, check them out at monetary-metals.com/Snyder. Again, that's monetary-metals.com/Snyder. I highly recommend booking a call with them today to see if they're the right fit for you. We thank Monetary Metals for their sponsorship, but now let's get back to the rest of our video. Now, Javier Milie promised not just to be different, but to be very different. His chainsaw became the symbol of the libertarian approach to bloated government waste and corruption. To restart Argentina's economy, he needed to reduce the public sector's influence and just reduce the public sector itself. Government programs, especially those intended to fix the economy, always, and I mean always, make it worse because governments are uniformly terrible at economics, small e economics. They provide next to zero value. They're horrible at resource allocations, largely because there's no feedback mechanism. Therefore, government spending is riddled with waste and unproductive ideas that spur mostly fraud and corruption. And yet, the world's economists and the media all call this powerful stimulus. The only thing they ever stimulate is more government. And that's the one big thing Milie vowed to change. And he definitely did, or at least he started to take a huge chunk out of that massive public sector in Argentina. As the Cato Institute reported in its spring magazine, Milie cut the budget by around 30% and balanced it 1 month into his term. That facilitated more disciplined monetary policy and the reduction of inflation from 25% per month when the president came to office to 2.2% in January 2025. That success that Milie's economic stabilization has had so far is now widely acknowledged. The president took an economy from crisis to recovery much faster than most people expected. Growth returned in the second half of 2024, wages have increased, and the poverty rate, after having initially risen, has fallen below the 40% range that the previous government left as part of its legacy. How much Milie has been deregulating, however, and the role deregulation plays in Argentina's success is less widely appreciated, yet is every bit as important as cutting spending. And that's absolutely true. Deregulation and giving the economy more freedom and less of an overbearing government sector is critical to transforming the economy and the system overall into something that can be capable of sustaining economic growth and creating wealth and prosperity. And it seemed to be going really well, at least in the initial stage. So if that's the case, why is the dollar suddenly wielding the chainsaw or zeroing the chainsaw in on Milie in Argentina? Now, in a nutshell, and it's always more complicated than that, but in a nutshell, Milie hasn't been able to fully translate that success to voters. In other words, he hasn't been able to sell all of Argentina on sustained success. In fact, Milie's La Libertad Avanza was crushed in a local election in Buenos Aires just a couple of weeks ago. Milie's recently formed La Libertad Avanza party captured just 34% of the vote in Argentina's biggest province, losing by a landslide to the left-leaning Peronist opposition, which secured 47% with the majority of ballots being counted late Sunday. Again, this is a couple weeks ago. Milie conceded that his right-wing party's crushing 13-point loss to his populist rivals represented, quote, a clear defeat. Quote, we suffered a setback and we must accept it responsibly. That's what Milie told grim-faced supporters at his party's headquarters, with his tone reflective and even chastened. And the response in the markets was immediate because, as I told you in the introduction, the Eurodollar has already turned this summer and has already moved toward tightening, and so it leaves even less room for error than it might otherwise have been for Argentina. So the electoral defeat became a market rout. As Bloomberg put it, Argentina's currency, bonds, and stocks plunged after President Javier Milei's party suffered a landslide defeat in a key provincial election, heightening concern the administration lacks the political support needed to sustain its overhaul of the economy. The government's dollar bonds posted the biggest declines in emerging markets on Monday, again a couple weeks ago, with benchmark notes due in 2035 slumping by 5.3 cents on the dollar to 56 cents as of local time. Yields soared to just below 13%. The official peso plunged as much as 7% when local markets opened before paring some of their losses. It was trading at $14.09 per US dollar, which is in a key range within 4% of the upper level of a trading range set by policymakers. The benchmark Merval stock index tumbled by more than 12%. Like I said, this is not something that just popped up more recently. The peso's been in trouble for several months now, really going back to July. But even before then, you go back to the beginning of Milie's government. Upon taking office, Milie let the peso plunge from around 367 to the US dollar all the way to about 800. And 2 days after being sworn in, he said, quote, for a few months, we're going to be worse than before. That was as the economy in the country needed to take painful medicine in order to try to get a hold of the situation. At the time, inflation was nearing 150% per year, its trade deficit was a massive $43 billion, which meant it needed to borrow at least that much in US dollars just to keep the economy running at a bare minimum. Plus, the country owed a massive $45 billion to the IMF already from its previous bailout, and then another $11 billion in immediate funds to other sources. However, despite those massive challenges, as I said before, it appeared like everything was on track. The government even allowed the peso to somewhat freely float, at least in a range with a target of around 1,000 pesos to the dollar on the high side, and a lower boundary set at around 1,400. Back in April, Bloomberg had reported traders in Buenos Aires are beginning to buy into President Javier Milei's target of strengthening Argentina's currency toward 1,000 pesos per dollar, even as economists warned the trend could reverse in the second half of the year when dollar supply tends to dry up. And in these conditions where we see lots of Eurodollar tightening, dry up gets even more dry. The currency is now trading 1,100 pesos per dollar. Remember, this is back in April. It's a surprisingly low figure for those who predicted that the removal of currency controls in Argentina would lead to a devaluation. The peso now floats freely between 1,000 and 1,400 per dollar, a major policy change which is unveiled as part of Argentina's new $20 billion program with, of course, the IMF. But, and this will be no surprise to viewers of this channel, things started to turn in early July. We talked about this with a couple of other indications, starting with the U.S. Treasury yield curve. A U.S. Treasury yield curve that began to really bull steepening from the end of May forward. We talked about this with other currencies like the Indian rupee that really began to plummet around the first parts of July. So too with Argentina's peso. For the peso, it plunged to 1370 by the end of July, staged a small rebound in the first 3 weeks of August, before sinking into September, long before they even got to the election. But then once the election in Buenos Aires was held and the results were known, it accelerated the downward trend. The day after all that was announced, the peso was below the so-called floor, which triggered official government buying, meaning the government was supplying US dollars out of its own accounts. And as of last Friday, the central bank had reportedly poured about 1.1 billion of its thin reserves over 3 days, trying to stem the tide in the peso. And on Friday, Milie was forced to admit, quote, the market is in panic mode. That's because everyone knows how this ends. The country does not have the staying power to hold the currency up above 1,400. Unless it can find a way to reassure the market that it won't end up, letting the exchange rate plunge, everyone's going to be looking to get the hell out while they still can. Now, Milie is supposedly turning to the IMF and even the U.S. Treasury seeking some emergency funds to try to help bolster confidence in the peso, but it might already be too late given the Eurodollar conditions, which maybe if they were more normal and less tightening of conditions, they would give the Milie government a little bit more slack. But that's not what we have here. We have a Eurodollar tightening that is increasingly tightening the noose and taking away the future use of Milie's chainsaw. And that's the crux of it. He had to sell his reforms to the public in order to generate sufficient political capital to be able to see them through. It was a long shot because the world knows Argentina is a basket case. And as a basket case, it tends to want to return to type. And now it appears as though Milie couldn't convince Argentinian voters his approach was actually working or working well enough. So the Eurodollar, which is already in a bad mood, is simply pulling up stakes and rushing for the exits. There's too much risk of the next government coming in and just doing what Argentina always does. That's what the Eurodollar does during these downswings, these tightening episodes. It is the tide going out and revealing who is naked. In this case, without a solid political mandate, Argentina and Milie are the most naked right now. And there'll be more as the Eurodollar tightens further and reveals a lot more ahead. It is the more extreme downstream consequence from what started last year when the dollar spiked, a warning that the world wasn't going in the right direction. And if it kept going, the consequences, like the funding, were going to be tightening up. And this is exactly what happened back in 2018, heading into 2019. Argentina, at the time having been somewhat of a darling among Wall Street, Wall Street rushing to give Argentina all sorts of dollar funding for reforms that were promised the year before, globally synchronized growth, a lot of people thinking the economy is heading in the right direction, but Early in 2018, Argentina was the canary in the coal mine. It was not going to be inflationary in the US because the US was not in good shape. The entire globally synchronized idea, whatever it was, mostly just reflation, was already reversing. In Argentina, as I said, the canary in the coal mine, along with the Indian rupee, that told us what the dollar was thinking and the Eurodollar was doing about it. Now, for several years before then, Argentina had been the financial world's baby, the financial Cinderella finally given the chance for an invitation to the mainstream monetary ball. The country had promised deep reforms back in 2016, and then the nation's fiscal chief at the time, he had become famous. He was on CNBC all the time, Bloomberg, for his road show. Finance Minister Luis Caputo got to be the world's most visible bond salesman. He even went so far as to successfully complete an underwriting for $2.75 billion of 100-year Euro bonds. These are Euro bonds being offshore bonds issued in US dollars. Now that was back in June of 2017, where he managed to negotiate a coupon of just 7.1% for 100 years. It wasn't really just Argentina's promised reforms. It was the global climate in which they were going to be enacted. 2017 was Janet Yellen's globally synchronized growth. And for many emerging market economies, the trend was taken seriously and at face value. This time was different, they all said, and everyone was told to believe the same thing. The idea was firmly planted by especially officials throughout the world who kept claiming globally synchronized growth represented some clear change after the decade of silent depression. And the Eurobond market was willing to listen in 2017 before the Eurodollar system started to reject it early in 2018. And as the dollar rose during that rejection and everything turned around, globally synchronized growth meekly dissolved like powder on a wet surface, and Argentina was first in line for execution from the monetary firing squad. Its currency plummeted, and the dire consequences came back all over again. But just before the final death spiral, the IMF stepped in. Having seen what happened just a few years before, officials within the organization attempted to use Argentina to build a firewall of sorts to defend the rest of the world's most vulnerable systems from the growing negative dollar wave. And the organization's director at the time, one Christine Lagarde, desperately tried to make her name and claim her historical place by doing so. In June of 2018, as the Eurodollar tightening was just getting going, Lagarde, who was egged on by all the right people who also don't understand global money, she had the IMF commit to the largest bailout in its history, initially pegged at $50 billion or 1,110% of Argentina's quota. There were the usual mandated fiscal and central bank reforms on top of already what had been promised by the government. This was supposed to be a model for handling the monetary world of the 2010s, these silent depression, not that any of them recognized all those telltale signs. And upon signing the agreement with Argentina, Lagarde announced, quote, "I am pleased that we can contribute to this effort by providing our financial support, which will bolster market confidence, allowing the authorities time to address a range of long-standing vulnerabilities." Yeah, the thing was dead in less than 3 months. By the end of August 2018, the Argentines were back begging the IMF for more, which they received in September 2018, right about when all the Eurodollar hell was about to break loose, or what we call around here the Eurodollar landmine. But the IMF, they didn't know any of this stuff. They don't know money. They added another $7 billion to the rescue pile. They sped up the release of prior tranches from the original. And Lagarde's group tried to get creative with the peso, setting up a moving non-intervention zone, which none of the details really matter. They're all immaterial at this point because the entire plan was scrapped in 2019 after the landmine as the world headed toward its recession, quote-unquote, scare. Now, the IMF really tried to make it work in Argentina. And they made it very public for that reason, simply because they thought it would work. Lagarde meant to parade around the success story, her point about quote-unquote bolstering market confidence, which was supposed to mean a hell of a lot more than this one small country in South America. It failed because at the end of the day, Argentina was still Argentina, but more importantly, the tighter Eurodollar world had zero patience because it had someplace to go. The peso's crash in 2019 mimicked global dollar conditions throughout that year, including its largest plunge in August of 2019, right as the, quote, recession scare around the world was reaching its near-term crescendo and being proven to be a hell of a lot more than a scare, as, well, some places found out before the pandemic arrived. The larger point here is that we're taught to believe governments and central banks are the most powerful financial forces. It's what everyone says. It's what we're taught in government-directed and funded schools. And I wonder if there's a connection here. But many people ask, why does Argentina and really the rest of the world need so many dollars? And the answer is a globalized economy uses primary dollars to transact in everything from imports to bond buying. Argentinians want cars, computers, and energy, and the rest of the world's suppliers aren't going to accept pesos for them. They have to find someone to lend them dollars in exchange for pesos and promises to pay. And Argentina's government still borrows way too much, and its local economy can't support it all on its own. So they need foreign investors and foreign, quote, capital who are willing to lend dollars and things in instruments like Eurobonds. The point is, like everyone around the world, they need dollars for the basics, finance and commerce. When the dollar providers just aren't in the mood to provide dollars, they take a second look at their riskiest borrowers and start charging them more and making them put up more collateral, assuming they have any. So when we see signs of dollar tightening combined with more extraordinary signs of growing distress, we've got a good idea of what's going on, and not just locally in countries like Argentina. Global dollar tightening is being taken out on Milie in Argentina because Milie couldn't sell his successes enough to Argentinians, but the dollar tightening sealed the deal. Now, of course, that's really bad for them, Argentina, but it's also not great for the rest of us because it confirms what we've been seeing all summer. This Eurodollar tightening is going to take its own chainsaw to Milie's chainsaw and a whole lot more beside. We got a perfect example of this illusion of power over in Japan. The Bank of Japan and its stock selling scheme. And I went over the details and why it's an illusion in the video link below. As always, thank you very much for joining me. Huge thank you, Eurodollar University members and subscribers. Until next time, take care.